People are starting to panic, and 2020 is not looking like a great year for developers. The Dow is down over 2,000 points today and has been collapsing for the last few weeks. VCs are warning founders to preserve cash, all the big tech conferences have been canceled, governments are talking about helicopter cash and 0% interest rates, and things are deteriorating very quickly out there. In today's video, we'll look at why, and more importantly, what does it mean for software developers in the future. Everything we see in the headlines is about coronavirus, but we can't blame everything on this virus. The global economy, and the tech industry in particular, has been in a nearly non-stop bull market for the last 10 years. Some might even call it a bubble. If we go back to the early 2010s, many of the big public companies that we know today were just starting to raise money from private VCs. The successful startups always had access to a huge amount of cash, and were able to focus on growth while operating deep in the red, or in other words, not make a profit for a really long time, or in most cases, never make a profit. Around 2016, a lot of these VC-funded startups started to go public. One of my favorite examples is Shopify. It IPO'd in 2015 at $28. In 2020, it's traded well above $500 per share. Now, the company's revenue has grown significantly, but so have expenses, and it's still not profitable today. But its market value has increased 20 times on speculation and optimism. And there are many other tech companies in a similar situation. They continue to burn through cash and are a long way from profitability, which is how you generate new cash on your own without external financing. Now, I'm sure Shopify will turn out just fine, but there are plenty of smaller companies out there with shorter runways that may not be able to survive a severe cash crunch. Sequoia Capital, one of the most well-known VCs in Silicon Valley, released this black swan memo to its founders. I recommend reading the whole thing on your own, but basically it boils down to a warning that companies may not be able to burn through cash like they have in the past. And what's one of the first things companies do when they start to run out of cash? Well, they start laying people off. Employees are very valuable, but they're also very expensive. And at the end of the day, cash is king. When you run out of money, the game is over. Now, at this point, it's impossible to predict if the stock market will continue to fall, but layoffs always lag behind the activity in the stock market. During the last financial crisis, the jobless rate didn't start to rise until well after the stock market had bottomed out. On top of that, we've already seen cost-cutting and downsizing among some of the big tech unicorns. So what does all this mean for professional software developers? If you have a job today, great. It's probably a good idea to hold on to that job until you have something better lined up. If the companies that have the best developer jobs are cost-cutting, it means there will be fewer developer jobs going around, and it may drive down the value of compensation. And I would expect that to have the biggest impact on junior developer roles, because we have a lot more talent entering the industry through things like coding bootcamps. Not to mention, these coding bootcamps have been receiving a lot of criticism lately, primarily because of already poor job placement rates, and that will only get worse in a bad economy. It really just comes down to supply and demand. More talent and fewer jobs means less money per job. Furthermore, if you're taking stock options as compensation, your ability to get rich off those options is far less likely in a bear market. Taking equity as compensation is far more risky for you than it is for the founders offering you that equity. So just something to keep in mind. Now, if you're a software developer building a product, getting VC funding for that product may be more difficult in the future. My personal philosophy is to focus on building a profitable product right from the beginning. When you're not dependent on external funding like a bank or a VC, you're much more likely to survive economic swings. Now, what if you're just learning how to code? Should you even bother? Well, in my case, I'm passionate about building software. I enjoy the process of identifying problems and then writing the solutions and code to solve those problems. Even if things continue falling, it's still a great skill to have, and will continue being the source of many high-paying jobs in the future. So here's my interpretation of what's going on. We have this awesome tech industry, but maybe we've been a little overzealous. The coronavirus, not really a huge deal on its own, is a catalyst popping the bubble. Now, when things start to go down in a panic, they go down a lot faster than they did on their way up. And then economic realities start to set in. Companies with poor cash flow will have to go to extreme measures just to survive. Now, I just want to finish things off by reminding you that I might be completely wrong. This whole thing might just blow over in a week or two. Or maybe Donald Trump and the Fed will step in and save everybody. I mostly just wanted to provide a worst-case scenario type of outlook. In fact, economic declines tend to be a good thing long term. They create a lot of opportunity for developers and entrepreneurs, and the painful parts tend to be short-lived. I'm going to go ahead and wrap things up there, and tomorrow I will be back with a regular code tutorial. Thanks for watching, like and subscribe, and I will see you in the next one.